Every portfolio should have some technology. There are specific stocks you want for the long term, and they're all in Jim Cramer's new book, Stay Mad for Life. I want to welcome Jim Cramer to the show. Hi, Jim. Okay, you like Hewlett-Packard, Corning, and of course, Google.
Like them for all three different reasons. The rubric, of course, is technology, but Hewlett-Packard is an execution story. It's killing Dell. Mark Hurd came from NCR. He radicalized the cost structure, took it down dramatically, and increased sales. This is a man who understood that you had to have big reductions in overhead, and you had to really de-emphasize the United States for overseas. So he's got a remarkable business, a stable business that grows nicely, buys back a lot of stock, and is still very inexpensive on a multiple basis. Corning is a reinvented story. This was a company that had fallen on hard times between 2000 and 2002. But they went right back to the lab. They developed bendable fiber. Bendable fiber is probably the solution for Verizon's build out to Boston, Philadelphia, and New York. You need that because it's a fiber that works in apartments. The previous fiber that you were snaking through did not produce a signal that was worthy of Verizon. Corning's new fiber does, and Ivan Seidenberg has indicated to me, the CEO, that this is an important initiative. They need bendable fiber. The other part of Corning is LCD. Liquid crystal display. We know from Best Buy that those are very, very strong, especially because of HD. It's another HD TV. Don't overlook the fact that they have a diesel engine business that's for clean diesels. They don't talk about it much because it's not big enough to move the needle. I think it'll be $1 billion business in 2011, and they're the only one that has it. So they have a lot of proprietary stuff. Google is a company that has 1/100th of the ad dollars in the world, and I think that they're going to double that. And, I think that when you double that,
it's $673 right now.
But when you get $600 billion in ads, and they have let's say they have up to $10 billion in ads soon, I think that they could very easily get $60 billion in ads because I think that they're the only game in town. One of the things we used to joke about was to be like only when the dot-com period happened, that there'd only be like 4 or 5 handful. Well, it turns out to be there's only one, which is Google. They're running roughshod over Yahoo. I think that Google is, remember my rule of 10, you got to divide it by 10 in order to understand it, because what you always want to focus on is that the price to earnings multiple is not outrageous versus the growth rate. People want to look at the price to earnings multiple and say, wow, that's expensive. They want to look at the dollar amount, they say that's expensive. Those are both wrong.
All right, Jim Cramer. Google, by the way, up 40% this year.
That's fine.
And it's still going higher. Google, Corning, and Hewlett-Packard, 3 tech stocks to hold for the long term. There's more in Jim Cramer's new book, Stay Mad for Life. Go get it for the holidays. It's a great stocking stuffer. Thanks a lot, Jim Cramer. You're watching Wall Street Confidential on TheStreet.com TV. Stay with us.